Hello, hello, hello. Mic test. Mic test. Hello, hello, hello. Hello, 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 hello. Hello, guys, and welcome to the 133rd edition of the Trading Opportunities webinar. This is your host, Nirav. And before we start off the webinar, let me give you a very quick introduction about this series of webinars, which we conduct on a weekly basis. Currently, we are, as I mentioned, on the 133rd edition. And so far in these webinars, we have captured a total of 333 trades, including 3 trades which were discussed during our last webinar, that is 132nd webinar. Those of you attending for the first time, let me tell you guys that we go live every Friday. Timing is always 2 p.m. GMT or 7:30 p.m. IST. So whichever time zone you are in, just convert it accordingly. Right. And a little bit more about my work. I'm also the author of the book Think with the Markets, available on Amazon's Kindle edition. If you are an intermediate to advanced trader with the knowledge of Elliott Wave, you can have a look at it. For beginner to intermediate traders, I will suggest the video course, The Complete Guide to Professional Trading with Elliott Wave. You can check it by visiting 50eyes.com and the link in the middle, the Elliott Wave course. Right. Apart from that, for all the webinars that we have been conducting and videos we have been uploading since 2016, we have kept a track record which is publicly verifiable. Basically, every instrument which we have covered on the date, the analysis, and the link for everything is, as you can see over here, publicly available for you. And I like to show it off before beginning the webinar because since 2016 we have been keeping this record and have had a 6-year track record of consecutive 80% plus accuracy, right? After which we shifted our pattern to much more frequent weekly webinars. And for that, as I just mentioned, we are currently on 133rd edition and we have captured 333 trades. And for that, we keep a track record or what you call track sheet live. That is, I'll see the past analysis first and then go to the live chart. And this will be the format in which we will proceed with the webinar. We'll first check the chart of euro, followed by crude oil, gold, S&P, Nifty, and eventually we'll check Bitcoin chart as well. Right. So that's it for our quick introduction. Now let's head over to our first chart, and let me just quickly go over the right. So here we have the past webinars discussion on Euro USD. Let me just pause this recording and see what was being discussed in the last webinar before we start off our discussion with the current one. So as you can see, this is the 132nd webinar, which was conducted on 13th of this month. And you can also check it by visiting the YouTube channel 50 Eyes Market Analysis, clicking on live and then checking the 132nd edition. Now in euro, our bias was that we are in a corrective structure, ABC correction we were expecting, and it was also possible that the C leg was complete over here. And eventually, either we'll wait for the C leg to complete on the downside, or if it's already complete, we'll look for longs above 1.1154. So basically, upside setup was longs will look above 1.1154, or we will look for the wave C to complete and then look for upside setups. Now let's head over to the live chart very quickly. And here's a chart of euro. And as a matter of fact, it has triggered my longs, and I have actually added longs on this counter. And yes, guys, of course, I forgot to ask if you are live in the chat. Let me know how's the audio and video, etc., etc. I'll check once again at my end before we proceed, so that yes, it's working at least at my end. So as you can see, we have added longs already on this counter around 1.11629. It is visible here, 1.11629, right? And the idea is still the same. The possibility of wave C still having one leg down remaining is still there. So that's why it's only a partial position I have added. We'll look to add more once it breaks 1.11960. Possibly more short term, maybe even possibly scalps, but that's our take for now. From an Elliott Wave perspective, the idea remains that we have a possible flat structure in play. A flat structure is basically a three wave structure where generally the market will move three down, three up, and then five down. So in this case, the first three leg down is called the A and B and so on and so forth. So that's why the wider stop losses in this case. Other than that, even if the market goes down, I'll look to add more here, or perhaps at least count the internal structures. And once we see the impulse completing, then we will look to add more. So both strategies are possible. We'll look to see how clear the market is, and accordingly, we'll decide the positions. Second idea on this counter is that we have a zigzag possibly complete here, in which case the market is open for upside here, and we do not really expect that down move. So long story short, we are just swing perspective wise long. Only problem will be if we see the market go below 1.09694, basically below this level, and sustain below it, then I will have to reconsider my possibilities of long, because after all we have a incoming support here, and if the market does not hold the support, then there's not much point in holding the long positions. And that's our take. And yes, I actually forgot to actually check the comments. And hello to Greenville Souza, nice to see you in the live chat. And of course our regular viewer Louis, very good morning to you, right? And anyone else watching, I can see a good number of people are watching live. Do not forget to say hi or hello, right? In the meantime, I think we have discussed the main points on euro. We build up long slowly based on both our current hypothesis and the invalidation level we have also considered. So in that case, let's now head over to our next chart of crude oil and see how things are going on this counter. One second here. Let me enable a few things. Hello, Etivat. Nice to see you. I think you joined in the last webinar, right? So, new regular viewer. Right. So, as I was saying, Vero, we have done with the discussion. So, now let's quickly head over to our chart of crude oil and see what was being discussed in the last webinar. Somewhere, let's say here. Yes. So, crude oil, we had two biases. One was that this was the three, which was our main bias, and this was the four, and that one more down leg will be seen, right? That was the main bias. However, the idea was that it should remain below 70.36, which is not something that happened. The market actually sustained below 70.36. And the second bias seems to be playing out, which is suggestive that we may have completed a impulse from this point of reference, which is starting around the level of 78 point something, roughly speaking. So now with that in mind, let's head over to the live chart. And of course, if you are interested, you can check the whole crude oil discussion by visiting the YouTube channel and checking out the 132nd webinar link. Right. So here is the live chart on screen now, and a little bit of longer time frame analysis we need to do here because things are getting a bit complex. One second here. Let's see. I'm discussing it from this point of reference, I believe. Let's go to 4 hour. I'll nice to know that. At what? So one second. Yes. So on the high time frame, there are a few possible ways this market can proceed, but I'm just more focused on the last leg, right? In the last leg, I'm assuming that from the point of reference around 87.915, we have what may seem like a simple zigzag kind of structure, first leg here, correction, another leg here, and a triangle here. Triangle will generally have 5 waves in it, so this will be the A wave, B, C, D, and E. So that makes it your first leg, correction, and last leg, right? So basically, a corrective structure has completed in this projection, and even the corrective channel has been taken out with a spike, which is generally a sign that buying pressure is seen here, and market has gone back into the channel. So basically, we have sort of a classical price action kind of buy setup, which we missed here for good reason, because of our last analysis being completely bearish. Now the perspective becomes that on the shorter time frame, we think that this market may be doing a small upward rally, and in that rally, we are currently in a possible diagonal formation. So let's have a look at this. So it is not 100% confirmed yet. It just looks like a diagonal so far. So I am assuming perhaps it will play itself out. But in general, I would like to only add shorts for a smaller time frame, possibly even scalps, and that to below the yellow trend line. The immediate targets incoming between 69.27 and 68.43. Right. So that is the initial target level which we expect once the correction starts to come in play. And overall expectation is that if this market holds this support level, then at least one more up leg is expected to be seen. And generally, we like to project the 1:1 levels. So basically, if we see a support coming around, let's say 69.27, then we expect something around 74.64 or perhaps even higher. We do have a white resistance line incoming here. So it is expected to be breached in case this market is doing a corrective leg to the upside, right? Remains to be seen. It could also be an impulse in the upward direction, in which case this will be a wave one, this will be a corrective wave two. Let me remove everything at once, right? And in that case, this leg is expected to be much more bigger than this smaller target of 1:1 at 74, because three or wave thirds are generally known to surpass the expectations, right? But overall perspective, I'm not very keen on the crude oil market other than short-term swing plays. We haven't had a big play other than the this short which we captured. Right? Do keep in mind, if you are not following from the past webinars, we were able to get inside this short and capture it as the market went lower. Now coming to the reasons why I'm not very interested is because, as you can see, we have 3 4 different counts going on which are on screen, and there are others which are not really pointed on the screen. And I did a lot of spent a lot of time on this chart and came to the realization that it is having a lot of possibilities at this point, and it's better to make short term bets on it for now until it becomes more clear. Main idea I'll just explain is that from here we are expecting an A, B, and C kind of a flat structure possibly. And the thing is that the VFC of the flat could end here. It could just go further up. It could even take out this high, so even further up. So given that all these possibilities are possible, and there are then again two counts which are making this a very complex market to track. So that's why only short-term positions for now, and we already discussed this short-term trade setup. Nothing much to add here. And good afternoon to you, Raghu. Again, one of our regular viewers and also a member of our private Slack group. Now, with that being said, if you guys have any doubts or questions on crude oil chart, you can just let me know in the live chat. Otherwise, we'll move over to the chart of gold, which I've received an alert just before the webinar has taken out one more of our alert to the upside alongside silver. So first of all, here is the chart of gold as discussed in our last webinar somewhere here. Right. So in the last webinar, our bias on gold was that we were expecting further upside movement. As you can see, let me just zoom into this. We were seeing the market trading around 2578 roughly, and the idea was that at least two more legs are remaining, and this is the nomenclature or the wave position of this market. In case you are interested in this theoretical part, you can just check the whole discussion. It started around 16, ends around 26. Everything is time stamped as always. Right now, let's look at the market and see what's really happening here on this counter. Now on screen is the chart of gold, and as you can see, the market has since 2578 is now at 2600. So I wouldn't say very big movement, but overall we weren't saying there will be a very movement. I mean, from swing perspective, we had given some higher time frame targets around 2740 something levels, but overall this has moved as expected. I have even taken some scalp trades here, and let's just see if we can check some of them over here in the Slack. Let's see. Added more longs. Stop loss to 544. Stop loss move over entry to 2593. So as you can see, we have had some activity on gold, some trades this week, and then you can see some short-term trades, re-entered longs, book profit on longs. So those are all on September 13th. So good amount of activity has been taking place on the chart of gold, and yeah, let's see the current chart now. So first of all, I'm not very convinced with this count. The wave three is not looking the to be the biggest. It's not supposed to be the biggest in case of commodities, right? But I mean, in case of commodities, generally the fifth is the biggest. That's just one general point we know so far. So we can't say that this count is invalid or anything. And other than that, all the guidelines are also being followed. So I don't have anything against it. So, keeping the discussion in alignment with this count, I believe we can say that we are perhaps looking at a wave four, which is either complete or going to be in play. Sideways movement is going to be in play for wave four. But other than that, once this wave four is complete, we expect that it will take out the high of 2618 at once. It will complete the minimum requirement for a impulse in the other direction. And keep in mind, we have been tracking this whole movement in gold since quite some time. We have been tracking this with the what do you call the triangle movement and the trend line support and everything we had drawn. I'm actually trying to check. Yeah, there it is. On the 1 hour chart, it will be more visible. There it is. The famous trend line support, which was tested once and then almost tested here twice, and then since then the market has gone up. And keep in mind, we were able to track this triangle while it was in play as well. You can check the past webinars for that. Overall, gold has been giving us exceptionally good trades and nice profits. Now coming back to our current discussion, let's assume that we want to see this market's perspective after this support, which is actually good point to analyze the charts. We have the point of reference around the price level of 2471, and the reference trend line is also a strong support. So a good point to analyze this market. From here, what we can see is we have a circle 1, circle 2, and circle 3 is in play. And those of you new to the Elliott Wave way of analyzing the markets, what we are saying is that the market is moving up as an impulse, and an impulse, the market will have five waves, and these are labeled as circle degrees 1, 2, 3, etc., etc. So there is a circle degree 4 and there is a circle degree 5, right? So as you can see, 1 is complete, 2 is complete. So since we are in the third, we would like to see five waves within the third, and within the third we again have what we can say 1, 2, 3, 4, 5. Again, there are other ways to count this market, and this may not look the most appropriate. Actually, it is probably not the most appropriate count, but 1 second. Right. So as I was saying, we are within the circle third, and once that is complete, a correction is expected, after which we expect one more leg up. So my play has been in this market to trail the thing, and currently, as we just saw, the last trail was at 1 second. stop loss moved to 2593, right? Yeah, Dinch, that's all very well and good, but please use the guidelines. They clearly state to ask questions and comments only based on what we are discussing. So instead of making statements which are definite, actually don't make statements here and there. Just ask questions if you have any, otherwise just keep it down low in the live chat. I don't like to read other people's opinion because I have my own trades in place and I don't want my what you call ideas getting influenced by others' analysis. So as I was saying, we have already got a stop loss around 2593. I think it's time to trail it a little bit to 2604 or maybe a little bit higher. And long story short, we are just looking for this one leg up, right? Once this one leg up is in play or has completed, there are two things that can happen here. First is that this market doesn't really care about our count or the fifth leg or anything, because do keep in mind in the overall higher time frame analysis, we are in a super bullish movement. We are in a 3/3 on a higher time frame analysis. I'll suggest you guys check one or two of the past webinars. I don't want to go into details on all that. So what happens in the 3/3 is that we see unthinkable moves. That is, price is getting doubled. So even something at 2,400 can go to 4,900 or something like that can happen. That's the general way wave threes are known to progress, and that is the reason why whatever longs I've taken, I've tried to hold them with a trailing stop loss instead of just going out and booking the profits, which is generally I would do in case of normal market activity. For instance, if I was trading here, there is not much point in holding a long. Obviously, keeping in mind if we were able to predict that this is a correction, which actually we were. So in this case, you would probably not want to hold with a trailing stop loss because most likely the market will hit it because it tested the same trend line twice, right? So once the breakout has happened here, now the probability of you holding it and trailing something is more valid because one of these moves can take this market exponentially higher. Now, anyways, so what I'm saying is that we'll just hold at the trail and see if we get lucky or something. Otherwise, our incoming high time frame price level is 2741. Otherwise, my trail will be at 2600 very soon, right? And after that, I'll see what to do. From a count perspective, let me just have you give a rough idea. The circle one was here, three is here. So if the three is actually complete here, see, there are two cases here. Either the three is super high up, unexpected completely, totally possible in this kind of situations. Second is three actually completes here and propagates sideways for four and then shoots up for the expected higher time frame move up, right? So both of these scenarios are possible in case somebody is holding from lower levels around 25, 30 ish levels. Their stop loss or trail will go to 25, 60 ish levels if they want to hold for this fifth wave, right? I don't like to hold that big of trails because even if this market goes and hits it, that's a loss of this many points. What is this? 2612, 2572, 40 points roughly speaking. That's big amount of movement in case of gold, I would say. So what I would like to do is keep the trail not very big and not very small, and at the same time if I get hit, I'll wait for the market to show if it's going for a 4, then I can just re-enter again, right? So keep that in mind that on a high time frame perspective, we still have expectation of much upside, right? And on a high time frame perspective, our support is incoming around 2550, let's say this level. So roughly around 2550. So now we have discussed this market from both perspectives, higher time frame perspective and shorter time frame perspective. And our conclusion remains we look for longs only, and if the current longs are wiped out, then we wait and look for re-entry. Right. So hopefully that solves your doubt, Dinch, because I think this comment was made a few moments ago. Right. Right. With that being said, let's see another chart. Of course, guys, if you have any doubts or questions on gold, just let me know in the live chat. And let me see if I have something else to discuss here. Mostly short-term analysis only here. Yes, there is one point here that in case the market for wave 5 goes up, our immediate target is coming around the price level of 2637, let's say, over here from this trend line. So in case I see a lot of profit, that is market going 2637 or near that level, then I'll probably even look to either book it or keep increasing the trail, perhaps even book it, because after that point we do expect a pullback. Right. So that's about it for our discussion on gold. If you guys have doubts or questions, you can just post in the live chat. Else, we'll move over to our chart of S&P's 500, where again the market has done as per our expectation, and we are seeing some good profits on that long position as well. Before we move to our next chart, quick what you call a request to you guys. Those of you who are in the live chat, do not forget to hit the like button, and highly importantly, do not forget to share the content. We need to reach the right audience and get at least an optimal number of views. I would say 1,000 plus would be an optimal number, given we have been doing it for so many years. You can see we have conducted way too many webinars. Before trading opportunity webinar series, we had another series called Applied Elliott Wave webinars, which was a monthly webinar series. So anyways, my point is that your kind contribution by sharing this content will be very helpful, and we would like to surpass this small number of views and at least hit 1,000 plus. So kindly do your part and share the content. With that being said, let's now head over to our next chart of S&P's 500. And you might see some disturbance. We are having some renovation work going on nearby, so can't do anything about that. So where's that? Let's check what was being said about S&P's 500 in our last discussion, and from there on we'll take it to the live chart. Right. So here is the rough outlook of our discussion from last webinar, which was conducted on 13th of this month, and our basic idea was that this market is looking bullish. The main view was that the support of 5405 to 5345 was not properly tested, right? We were expecting a test to the downward level, basically 5345. So there were two main ideas. One was that this market will just go up, and second was, in case of a bearish perspective, the market can go and take a deeper retracement here, which was a low probability case. Again, you can check all that in the whole discussion of the last webinar on YouTube channel or just the website 50eyes.com. Right. So coming back to the point, the main idea was that we were having a bullish perspective with this as the support region, and let's see what happened on the chart. So here is the chart of S&P on screen now. Last time the price was 56.25. Price now is 57.08. So good enough movement has happened in this chart, and that support region which we were talking about, this support region never got tested on the lower bound, only got tested on the upper bound. So that basically means that at this point, most likely this market is not going to retest it, as per my understanding of this chart right now. Right now, I do have a long position on S&P. Let's see very quickly what the charts are saying on our own trades. The trailing stop loss has moved above entry to 56.84. And we had also taken some scalp longs on S&P during the week. As you can see, on 17th, we had taken some scalp trades. And this original long entry is on September 13th. Let's check the actual price, 5623. So since 5623, we have moved to 57.0. Let's actually check the movement so far. So we have seen a movement of 106 points and currently are standing in 80 plus points with our current trail still holding. Right. Now let's look at the count on this counter. From an Elliott Wave perspective, we are still looking at the fifth wave here. And because we are in the fifth wave or the circled five, we can just count this it from this point of reference. One here, two here, and three here. You get the point. Four here, and the fifth complete or continuing unknown. If the fifth is continuing, then of course it can go further up. If it's complete, I would like to close my orders around or below 56.90. So it's not a confirmation level or anything. It could still touch 56.90 and then shoot up, right? It's just that I have placed an alert there, and below that level, it is a possibility that it can just go faster to the downside. So I have kept it as a alert here. So I'll just check the market once it touches that level to the downside. So overall, it's still in the impulsive formation, and since this market is quite bullish, we have kept it on trail, right? In case there's a big shoot up, in case this analysis is not the exact one, maybe who knows, this is just one, this is another two, and this is just heading up for another lower degree one and another two, and so on and so forth. You get the idea. In that kind of scenario, we can probably ride the wave a little bit. That's the whole reason of keeping the trail on this counter, right? Apart from that, if this market does break 56.90 and sustains below this red trend line, then we can then look for some pullback and some support on pullback. If let's assume that the fifth is complete here, we see some minor support forming around this level. Between the price level of 55.60 to 55.20. So some support is forming here, and in case the market goes below the mentioned trend line, we will then look for the market to take support within this zone, and that will be a possible sign for re-entry. Of course, we'll have to check how the market performs there, but that is a possible sign of re-entry unless the market goes straight up. So let's call this yellow count as our H1 and the other count as our H2. 1 second. Unable to change the color here. So anyways, you get the point. One count is suggesting straight up, other is suggesting correction and then up. With that being said, we are more or less done with our analysis on S&P's 500. If you have any doubts or questions, just let me know in the live chat. Before we move over to our last two charts of Nifty 50 followed by BTC. And yes, important point here. We have an important resistance incoming at 58.20. And the other resistance level is 5900. So in case this market decides to continue further up, these are the levels where we will possibly see the market take some profit. Or if the market does not take any profit see any profit booking here, then it will just surpass these levels and give us a strong up move. So that's it for our take on S&P's 500. With that being said, let's now head over to our next two charts. And of course, those of you who are joining in the webinar now, do not forget to hit the like and of course share the content. Do your part, guys, and let's reach the right audience. Hello Dharmesh, nice to see you again here. Let's see, where is the chart of Nifty. So from our last webinar, let's see what was being said on the chart of Nifty 50, somewhere here. Yes. So the take on Nifty was very clear. We were looking for a long setup only. And the consideration was we want to see the market sustain above 25,670 level as written here. We had a range, but 25,670 was the upper part of the range. So that was the what you call triggering factor. So since the market was, that's funny. You had written at the same time, hello sir, in the last webinar, Dharmesh. What a coincidence. Let me hide this one. So, anyways, what I was saying was 25,670 was the upside support level. The market had, how do you call, taken support at that level and has gone up. So, let's now check that on the live chart of Nifty 50. Let's load that. Here is the live chart 25,670. Let's mark it. Here it is 25,670. So the market has gone up, tested the downward level as well, and then kind of moved up. I have not traded Nifty specifically, but using that as a guiding factor, we were able to track movements on multiple stocks and specifically auto sector stocks, some of which have given good enough movements. We were able to take long trades on them. Right. So now let's look at what's the story with the Nifty chart and what we do expect from this counter. Actually, I think give me a moment, guys. I'll hello, hello, hello. Sorry about the little interruption, guys. So what we were discussing was the movement in Nifty so far, and what we had. One second, let me check if the audio is working. Yes, it is. So what we had was a little interruption in the chart of what do you call little idea of a word movement in the chart of Nifty, and we were deciphering this impulsive leg. So while there are multiple different possibilities here, I am going with the super bullish one as of now, and let me show you what I do mean by that. Let me remove it here and there. So yes, what I do really mean is that if the market is super impulsive, then this is just going to be a 1 or 2, and we are just going to see further upward movement in this impulsive progression. So if this count is correct, we have at least 2 legs remaining just for this double bracket 3, and then one more for double bracket 5. So 3 legs remaining before this market gives us any substantial downward movement, right? That's our super bullish take, right? But keep in mind that from this point of reference, around the price level of what is this 24749. From this point of reference, the second idea which we can have of this market is that this market is possibly going within the fifth leg already. But this time, if we take the idea as a possible diagonal, let's see how it goes. There is a possibility, I'm not 100% on it, but there is a possibility that this is a diagonal for fifth already complete, right? If that is the case, we can see minor upward movement, which will then be followed by a correction right away. So basically, two possibilities exist. The possibility one is that we have further upward movement remaining. Possibility two is that we have minor upward movement remaining, big downside, I mean, bigger correction to the downside, and then again resumption of the upward movement, right? So based on those ideas, this S2 is one which we need to keep in mind, because if it's going up, then it's going up. Doesn't really matter what's what. So Based on all this, what I would say is that we are going to look for long trades, but stock specific in this case, because if you look at the counts on the index itself, the 5th may perhaps be complete already, right? We do not need any further confirmation count or analysis. The 5th may perhaps already be in the last leg, right? This may even be the end of it. So if we are looking for new longs, then perhaps above 25,880, I will look to establish new long trades. Again, it will be better idea to search for long trades in the stocks instead of the index itself. But more or less, that's the idea. We wait and watch. If longs are being held, we can hold them with the trail. Otherwise, it's a bit of a risky market. And about 25,880 only, we can say that perhaps the market is establishing itself. What I do mean by that is if the market goes above this level and takes support above it and then tries to go and break the last high, that is what we call establishing above 25,880 in this sense. In this case, I mean, right? So if that happens, then we will look for long setups, right? Otherwise, it's a bit of a risky play at this point in time because the situation is not very clear. With that being said, we have discussed our chart of Nifty. And before we move to the last chart, those of you who are watching this webinar, enjoying the content and benefiting from it, do not forget to like this and much more importantly, share this content with your friends and colleagues so that we get much more viewership and reach the right amount of audience here. Hello, Dharmesh. As I've told you, I don't particularly track this instrument which you are asking request for, and I haven't even heard of it. And generally, these things take a lot of time, few hours, maybe more. So I can't take this request as such. I don't even know what this stock is. Right? Sorry. So with that being said, let's now head over to our next chart, Bitcoin. And we had a long-term chart discussion on BTC in our last webinar somewhere here. Let's see what was being said on this chart during our 13th September webinar. So as we can see here with the recording, let's just increase the speed and see what was being said here. Perhaps here. Yes. So this was the main idea here that in the higher time frame picture, we are perhaps looking at this market as a possible wave 4 in play. And if this is not a wave 4, then it will be a flat in the bigger picture. We basically had trades for both long and short, and both of those were breakout trades. None of them has triggered so far. So now look at on the live chart. So here on screen, we do have the live chart on BTC. So this is the expected wave 4 which we have in play, right? So as I was mentioning, either the wave 4 can be progressing. If it breaks below this level, then we can assume that it is not a wave 4, but it's a bigger degree correction in play. So huge downside opens up. And as long as it sustains above this support level, 51929, let's say 52,000, roughly speaking, then we look for long plays above 65,228 as a breakout long for scalps. Now, I don't think it's very feasible given the higher commission rates on this instrument. But overall, if the market goes above 65,228, we do have a scalp play. What the play will be, we look for 1:1 for this leg and this leg. I don't think that's a very big move, but we can actually check it over a second. 1 second here. Let's see. Can just make a simple line here. Actually, here projected from this low. And yes, as I was saying, this is not very feasible. The 1:1 itself is 65,228. So coming back to the same count, so what I think is feasible here is some swing long plays can be made around 25,228 for minor upward movements, say until 66,800 or perhaps higher. The reason for that is this wave 4 can just continue going sideways and sideways and sideways for a lot of time. perhaps go above it a little bit, then go back, and then above it again, then go back before giving the expected breakout, which we currently do not even have a confirmation for, right? So Bitcoin is a wait and watch market. We do have a scalp play, which we just discussed, but it's not the highest probability, and the profit potential is not the highest either. So wait and watch for now. And those of you looking for a bigger time frame analysis, I'd suggest you do look at the last two webinars. One of those webinars we have discussed the higher time frame analysis, or maybe the last three. So just check the last three webinars and check the BTC timestamps. One of these webinars we have discussed the high time frame analysis on it. Right. With that being said, we have now discussed all the charts which we generally do discuss in these webinars. Those of you who stayed with me till the very end of this webinar, thank you very much. And I do hope that you guys enjoyed it. And in case you did, do not forget that we need to reach the right audience and get a good amount of views. Given our lower reach, there is a lot more quality content that I would like to bring, and I have held off because of the lower reach so far. So kindly do your part. Let us reach 1,000+ views together, and then we can have some more nice stuff for you guys. Right. That's about it for the webinar. Thank you for staying till the end, guys, and I'll see you guys in the next one. Take care.